Good morning and welcome back to Almus Market Mornings. If markets needed another curveball, the global energy landscape just got one. The UAE has announced its exit from OPEC after nearly 6 decades, citing the ongoing supply disruptions from the Iran war as a right moment to step away. A move that raises fresh questions about the group's cohesion at a time when the oil markets are already tight. And on the central bank front, the Bank of Japan held rates at 0.75% in a split decision, keeping the door open for a potential hike in June, while the yen gave up initial gains after cautious commentary from Governor Ude. All eyes now shift to the Fed meeting tonight, where investors will be closely watching not just the policy stance, but also signals from Jerome Powell in what could be his final press conference as chair. Good morning, JK. So many updates and so much volatility in the markets. How are you reading them all?
Good morning, Eshan. Yeah, definitely. The week is packed with a lot of events and also, some unexpected, things happening also. So, it's all adding to the volatility in the market, particularly the oil market, which is actually the most influential segment of the market, and more particularly for the Indian economy as well. Yes, I think yesterday's UAE move, announcing a move out of OPEC from 1st May, is actually confirming the rumors that's been circulating for some time. And the background being disputes over production baselines and quotas. And there also seems to be some sort of a geopolitical factor in their relations with Saudi Arabia that has been recently strained. And the implication, also, as you mentioned, is that the cohesion among oil producing countries is now weakened. Now, what used to happen was earlier when the oil price used to rise, suddenly the OPEC will come and increase the output and balance the market, and then bring down those prices. And the reverse also used to happen when the prices fall substantially. They used to cut the production, and this was all done in a way, including all the OPEC members. But with UAE having 12% of the output and they moving out of the OPEC, it has a bearing. And the questions also raise whether the unity and the cohesion will how much more stress it will receive, because it could lead some other nations also to move out if it serves their interests. And so that is what the market is looking out for. So right now, no immediate implication for the oil price. Although oil price did go up yesterday to 111.90 and very tentatively paused for further gains also. That was more to do with the war stalemate between US and Iran not getting resolved. So that I think that factor was not influential. But in any case, the oil price going up also led to the other markets taking it a bit negatively. We had the bond prices coming down, yields went up almost across regions, including India, and also the stock markets also somewhat strained again. Already there is some sort of a concern that the US AI-related companies which are going to announce results. There is some kind of a concern because the valuations are already at the highest levels, and there could be scope for disappointment as well. So the other important event yesterday was the Bank of Japan meeting on the policy decision, and this actually kickstarted the host of central bank meetings that is lined up this week. Bank of Japan, of course, held the rate expected, and while there was some hawkish statement along with the decision, subsequent statements from the governor did not really indicate that the bank is in a hurry to raise rates. Actually, the timing of the rate hike is not really indicated. But what is interesting is the extent of split in the votes on the decision. The 3-6 split is the largest divide among the board members in recent times. And we assume that the split indicates the discussions were more on timing of the rate hike rather than the direction itself. The Bank of Japan also raised their GDP projection from 0.1% to 0.5%, core CPI to raise from 1.8 to 2.9%. And definitely these are indications that the conditions are ripe for a rate hike, but perhaps the current war situation and the impact it has on the economy might have held the Bank of Japan from raising rate yesterday itself. Overall, the impact on yen has been limited, which is now actually moving between 159 and 160. Strong verbal intervention, of course, is seen whenever it is trying to go towards 160. I think market is now looking ahead to the FOMC meeting. That also could give some direction to the yen as well as to the overall dollar. Now, the FOMC itself, as we have mentioned yesterday, we are on the regime change prospect in the FOMC because Powell will be heading his last meeting, his term expiring in middle of May, and Kevin Warsh in all probability will be taking over. Market would be less reactive to whatever Powell says because market is always forward looking, and they would be concerned about what Kevin Warsh's view is on the policy going forward, which is recently leaning towards some sort of a dovishness. We don't have either the dot plot or the summary of economic projections updated from the FOMC tonight. That will come only in June. However, Powell's press conference and in indications that he will continue as a board member after his term ends, and also going forward, Kevin Warsh statements or views on the monetary policy is what the market would be looking forward. So the dollar, I don't think will take too much cues from this um, meeting. More looking at the war-related developments only. So the recent war development has been that Iran has said that there can be a peace deal, if the US does not insist on talks on the or an agreement we agreed by US because that is the basis on which they have been fighting the war. So as far as the rupee is concerned, we have seen a clear break above 94 in the last few days. In fact, closed above 94.50, even as the war sees no signs of ending. Supply of dollars has been scarce. Demand has been quite significant from the importers. Recently, we also heard about another to a very large payment for the same in billions of dollars. And the FIAs, of course, have been selling stocks, and the dollar demand has been added to by them as well. There are other challenges for the economy, of course. There are mention about possible subnormal monsoon, agriculture industry getting hit, and then the airlines industry is also facing a tough situation due to ATF supplies as well as the higher prices. All these things could lead to even the growth being lower than what is expected, and there is also evidence of this slowdown when the industrial production also came down yesterday from what it was seen in March, and it's a clear indication that there is a certain amount of hit to the activity due to the ongoing war and the supply chain disruptions. So we should see the rupee not seeing any hint of a rupee strengthening from these levels, and all the gains related to RBI measures have been given up. And as we move towards 95, of course, market is also there. We could see more sustained intervention, and possibly we can expect some more measures from the RBI. But how much market will react to it is also doubtful, because so far whatever they've done, they have failed, and we are back near the all-time lows. Definitely, we should be watching out at 95 for the rupee. Thank you.
Thank you, Jayaram. So, and just to summarize, oil being the most influential segment for the market, even for the Indian economy right now, as the UAE's move to the exit of the OPEC has been finally confirmed and keeping the markets on edge as to how their relation will be going forward. But no immediate implication to the oil prices other than a small move on the upside yesterday, which is more to do with the stalemate situation of the war. Subsequently, the markets were strained otherwise also with respect to precious metals and also equity markets. came down and giving up their gains towards the end of the day. The extent of the split in the vote of the Bank of Japan was the largest in the recent times, indicating more as to the timing of the rate hike rather than the direction. And when it comes to central banks, the market is in focus for the FOMC tonight. And they may be a little less reactive as to what Powell has to say, as the more focus would be on Kevin Walsh now. But it'll be interesting to see what Powell's stance would be regarding staying a part of the Fed in the coming future. And with no visible hopes from a peace deal and continuing imported demand, we saw a clear break of 94.50 yesterday as the currency sustained above the same. Thank you all so much for listening. I will catch up tomorrow with a fresh round of updates. Thank you.